Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Texas Mineral Resources Corp. Quarterly report. Texas Mineral Resources Corp. Market capitalization of $0 billion is materially smaller than most of its industry peers of roughly $1 billion. Texas Mineral Resources Corp. Trades at a higher price-to-book ratio of 64.62 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The balance sheet appears very conservative, with liabilities representing only 11% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. Texas Mineral Resources Corp. Offers a range of services related to mineral exploration and development. The company's primary focus is on acquiring, exploring, and developing mineral properties within the United States. Its flagship project, the Round Top Rare Earths Project, covers over 9,000 acres in Hudspeth County, Texas. The company provides various business services including prospecting permits, land acquisition, exploration, and development of mineral properties. With its headquarters located in Sierra Blanca, Texas, the company has been operating for over 4 decades, having been incorporated in 1970. The significant surge in Texas Mineral Resources Corp. (TMRC) stock price over the past year can be attributed to a combination of several key events and developments. One major factor was the breakthrough in rare earth production achieved by USA Rare Earth, TMRC's partner in the Round Top project, which validated the commercial viability of their joint venture. The appointment of Jonathan Bagel to the board of directors in May 2025 also likely had a positive impact on investors, signaling new expertise or strategic direction. Additionally, the positive geophysical results from the Alhambra project, reported by TMRC in July 2025, boosted confidence in the company's exploration prospects. The planned public listing of USA Rare Earth via SPAC in early 2025, with a pro forma enterprise valuation of $870 million, also contributed to the increase in TMRC's stock price. This development highlighted the urgent global need for diversified rare earth supply chains and positioned TMRC and its Round Top project as a significant domestic source. The intensification of geopolitical tensions, particularly China's export clampdown on rare earths, further fueled the surge in TMRC's stock price. The strengthened cash position of the company, achieved through warrant exercises, also helped to support the upward movement of its stock. Overall, these events collectively contributed to a period of strong growth for TMRC stock, reflecting growing interest in domestic rare earth resources and positive developments related to its key projects and partnerships. The primary drivers of revenue growth or decline in a business are multifaceted. On one hand, exploration activities and the development of business operations can significantly contribute to revenue growth by uncovering new opportunities and increasing productivity. Furthermore, obtaining necessary financing is crucial as it enables companies to meet their obligations and repay liabilities, thereby ensuring continued growth. However, there are also factors that can lead to revenue decline. Failure to obtain sufficient financing can severely impact a company's ability to operate effectively, leading to a decline in revenue. Additionally, dilution in membership interest due to failure to fund cash calls or potential further dilution in ownership interest can also have a negative impact on revenue growth. These factors highlight the importance of careful financial planning and management in maintaining a stable revenue stream. The company's financial performance indicates a lack of positive operating cash flow. This means that the company is not generating enough revenue to cover its operational expenses, resulting in a negative cash flow from operations. As stated in the report, This is a significant concern for the company's long-term sustainability and growth prospects. Management's outlook for the company is centered around strategic growth and resource development. A key aspect of this strategy is the evaluation of claims held by Santa Fe, which will provide valuable insights into the company's assets. Furthermore, management plans to develop a metallurgical process to extract metals from the Round Top project's rhyolite, capitalizing on the growing demand for rare earth elements. The company's focus on domestic resource development is also noteworthy, as it seeks to reduce reliance on external suppliers and capitalize on untapped opportunities within its own borders. However, this growth will require additional time and expenditure to complete a bankable feasibility study for the Round Top project. Despite these challenges, management remains committed to driving forward with a clear vision for the company's future. There are growing concerns about the stability of supply chains within various industries. One key issue is the potential for inventory buildup, which can lead to wasted resources and decreased efficiency. However, an even more pressing concern is the risk of supply chain disruption. This can occur due to a variety of factors, including equipment shortages and supply shortages. A shortage of essential equipment and supplies can have far-reaching consequences, affecting not only operations but also customer satisfaction and ultimately revenue. In order to mitigate these risks, it is crucial for companies to develop contingency plans and diversify their suppliers to minimize the impact of potential disruptions. That concludes the financial summary for Texas Mineral Resources Corp. Feel free to comment below, and I will be happy to answer them when possible.